Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. It's Tuesday, the 25th of April, and we have Charu Chanana, market strategist from Saxo Markets, coming to us today as our guest. Charu, as always, great to have you on the show.
Good afternoon, Brian. Same here.
Now, Charu, before we get your insights after this long weekend, I'm going to take a look and see how the markets numbers have come up. We start with Bitcoin. It's at 27,434, down 1.25%. Ethereum is at 1,834. It's down 1.75%. Now, looking across to regional stock markets, markets in Australia and New Zealand are closed for a holiday. So we start with Singapore, with the SGX is down 0.75%. Bursa Malaysia is up 0.08%. Shanghai is down 0.48%. The Nikkei is up 0.14%. The Hang Seng is down 1.62%. And rounding up the numbers, we've got the Kospi, which is down 0.57%. Now, Charu, your views on market performance in the first half of the day?
Brian, actually, I do feel that the liquidity in the markets is quite thin. As you mentioned, Australia, New Zealand, Indonesia, all of them are out on holiday. Plus, I think investors are just waiting on the sidelines for that critical the tech earnings that are due to start today. But just very broadly speaking, I think there's some amount of risk aversion in place because of the developing US-China tensions, how that's playing out and the China reopening theme just working along very slowly. It's not the pace that most investors expected it to be at initially. So the concerns have really actually moved a lot because of the geopolitical tensions also coming into the play. So that's, I think, a little bit of a story that's playing in the Asian markets today, but more broadly, I think just being on the sidelines.
Now, since you're on the sidelines, obviously everyone's looking, as you said, to tech earnings this week. What are your expectations at Saxo?
Brian, I think, of course, this is a very critical week. We've heard from a lot of banks in the US, and it's been a pretty mixed results so far. Things haven't been as bad as one would have expected after the collapse that we saw in Silicon Valley Bank in March. But we did have First Republic last night reporting a deposit flight. So there are still some concerns there. And, markets have been in this Goldilocks now for quite some time. So this earnings season is really the big test as to where we go, to from here. I think some of the key things that I'll be watching for in these tech earnings reports this week and then Apple next week as well would be around obviously advertisement spend, because that's obviously a precursor also to understanding where the macro story is leading to. Of course, right now you still have recession concerns, not too bad, inflation cooling down, but again, not still coming in line with the targets. So we don't know where that story is going. So I think this earnings season will reflect upon at least the growth side of the story as to how much worse it can get from here. So I think that's one thing to watch. But specifically in the tech space, I think the other key story to map out would be the investments that are going in that artificial intelligence space, which has obviously created a lot of hype over the last few months, right? So who becomes the leader there? What kind of technologies people are putting their investments into? So I think those are some of the key stories that I will be monitoring in this tech earnings season. But even beyond that, this week is extremely critical. We get earnings from UPS and Caterpillar. We get McDonald's. We get energy players reporting as well. So I think overall, at the end of this week, we'll come out a lot more informed about what is really happening at a very micro level in the economy. So I think it's a really critical week ahead for us.
Now, Charu, on a different note then, with the absence of leads on the equity side, as we await earnings results, what is your view on some of the currency movements that have now been taking place?
Yeah, interesting question there, Brian. I think obviously a lot of investors are focused on understanding where does the dollar go from here. So I think that's really the critical story that's driving the FX markets right now. And again, we don't have much of clear direction, but our sense here is that even if the dollar was to go down, it is going to be a slow path, right? So there is still some scope for a risk aversion bid coming into the dollar. We may not go back to the highs that we saw last year, certainly, but it does look like the path lower for dollar is not going to be a straightforward path. So I think that's the key story. But I think besides that, if you look at FX pairs, I think the really interesting story playing out is in euro dollar, where
Mhm.
we see this massive yield divergence happening. Even if you just look at overnight markets, US yields were down, but European yields were running higher because ECB speakers still continue to be quite hawkish. They still haven't taken off the case of a 50 basis points hike at the next meeting completely off the table. So, that's still a possibility coming from the ECB. So, some kind of structural gains happening for the euro dollar, and that's why we're seeing it go above 1.1 again, which is a pretty critical level. Even sterling is quite close to 1.25, but we haven't seen a convincing break there. I think the other key FX pair to really watch out for would be the Aussie dollar, because it hasn't again gotten enough of a bid from that China reopening story, and the crackdown that we are seeing in iron ore prices is also weighing down on Aussie dollar right now. And then we have the CPI number for the first quarter coming out from Australia tomorrow, which is again a figure that I think a lot of market participants are going to be watching, because there are expectations that inflation will cool, but if it's still around 6.5, 7%, how much of a comfort can you take from that cooling and inflationary pressures? So, RBA so far has been maintaining that even though they are not hiking now, they're still open to hiking rates at some point in the future if inflation picture, labor picture demands it. So I think that's the key developing story that we need to map out. Will they continue to keep that door open for further rate hikes, or are we, in a position where we can say that the RBA is done with its tightening cycles? I think that's a key story playing out for the Aussie dollar as well.
Now, Charu, as always, thanks for your insights. Thanks for coming on the show.
Thank you. It was such a pleasure, Brian.
Now, I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.